Hi, Vi from myfractalrange.com here. It's Sunday, 24th of July 2022. Markets are still closed and now it's time to review all the signals and what is happening in the markets. As always, interesting week. Volatility is quite low. Chop returned in the markets. Closing some spreads last week was a good idea. If you listened to our Twitter Spaces on Tuesday, on Wednesday, I was talking about that I wanted to act, and on Monday I thought it's a good idea to initiate some very small short positions. Of course, as we all know now, that was not the best timing. I ignored momentum and hedged my position. So from the portfolio perspective, no changes from Wednesday. I'm almost fully in cash, USD. And I hedged my shorts on Tuesday, so nothing new from that perspective. Okay, so as always, first let's go to myfractalrange.com. Here I have my watch list, as always sorted based on upside-downside ratio. So dollar still looks good. But as we can see, if we go to trading view, we can see that this week dollar retraced a little. That's exactly what I expected. I was talking about that during the previous video last weekend. But from the signal perspective, dollar looks very strong, and I expect it to go up even more. Of course, we'll see what will happen. So 10-year yield is bearish. Immediate upside is to 3.06. And overall volatility in the market is very low. And I will show you a couple of charts soon what I mean. But basically, if we look at a VIX index, volatility index, the range is very narrow. So VIX closed at 23.03, but as we can see, that immediate upside is only for Monday is only 25.7 and downside 21.4. So basically what we have is 7% downside and 11% upside. And historically, when we talk about the VIX, it's quite narrow. So I will show you one chart now. And basically what I mean by that, and you can do it on your own on a daily basis, because math here is very simple. So this chart is basically my fractal range as a percentage. So the calculation here is very, very simple. So basically you just take range high minus range low, and then divided by the current price. So basically you take the width of the range and divided by the current price, and you get the range width as a percentage. So for VIX now the range is less than 20% move. Yeah, of course I know that VIX is already a percentage, and it's not correct to calculate moves in percentage terms. You need to calculate it in points, but for now it doesn't matter. It will show you the picture quite clearly. So as you can see now, the expected probable range, if we take upside and downside together, is quite low historically. So if we zoom in, we can zoom in from, let's say, the middle of 2020. Yeah, so not a lot of downside in the width of the range. So we expect volatility to go up in the future and in the near future, and maybe we will have an opportunity to open some shorts soon, or in my case to remove those hedges and maybe to initiate my shorts again. So yeah, and the same situation is with VXN, which is Nasdaq volatility. So if we take a look at a VXN range width. You can see situation is the same. Probable outcomes based on both upside and downside is way less than 20%. We're talking like 18-17% here, and historically it's quite low. So that's about volatility, and I like to do that not only for VIX or VXN, but of course for things like SPY, QQQ, EWM. So I will show you what I mean now by taking a look at the SPY first. So 1, 2, 3, yeah. So here is the SPY. Yeah, of course, this big spike was a first wave of COVID. So then VIX went to the moon, basically. But not only VIX, but volatility of the markets in general. So yeah, this is the SPY. Now it's 6%, actually 5.4%. And if we go to my fractal range, we will see that in case of SPY, what we have here is 3.6% downside and 1.8% upside, and so the sum of those is 5.4%. So if we come back to the chart, we will see that the probable outcomes are not as narrow as it was before, but still going down. So from the trading perspective, it can be good or bad things. It depends what you're doing. So of course, whether you are trading options, whether you are doing day trading, or you buy and hold, or are a swing trader. So of course, for short-term trading, as always, volatility is trader's friend, because of course volatility means risk, but short-term traders need assets to move to have a chance to make money. But for example, for longer-term buy and hold investors or swing investors, it actually can be a good thing. It all depends on which direction you choose, of course. And historically well know that if markets continue to go down, volatility will go up, because those things are always negatively correlated. But yeah, I just wanted to show you that from the beginning of July, basically, not only volatility is going up, but probable outcomes for the next day are also going up. Going down. So ranges are quite narrow. So I will wait for ranges to widen, because it will give me some signals that volatility can increase. And of course, when I combine that with all other signals, it can give me a more clear view about what's going to happen in the markets. And of course, my longer term view is still the same. So I'm looking to start shorting the market because the view is bearish. So let's also see QQQ and IWM, and then we'll go to correlations and momentum scores. Yeah, so as we can see, for QQQ, width of the range is a bit higher. So for example, for SPY it was 5.4%, for QQQ it's more than 7%, but still it's going down since the beginning of July. So if we take a short-term perspective, let's say from January 2022, it's relatively low already, but if we take a longer-term view, it's not as low as it was after all the COVID things were sorted out. And so of course it can always go down, but if we look the period since the beginning of this down move, let's call it December or November 2021, this width of the range is relatively low. So, and sometimes I call it volatility, because yeah, of course, it's not the volatility calculation, but of course, when volatility is higher, ranges are wider, and when volatility is lower, usually risky ranges are also narrow. So here we are with quite narrow ranges. And now the last one is IWM. And then maybe I will also include TLT, just in case. Yeah, same situation, going down since July. Current range of a VIF is of a range is 7.5%. Same situation. If we look into short term, it's quite narrow, but of course not as narrow as it was before the COVID, or even after the first wave of COVID. And the TLT. So TLT, I always like to watch TLT as my fixed income proxy. Some people use different products, but basically, yeah, nominal prices and values can differ, but the shape of a signal is the same. So in this scenario, doesn't really matter. I just want to show you what's going on. So current VIF of a range is 6%, and actually it's not that low. Of course, if we ignore the beginning of COVID, you will see that it's relatively high. So it's going down now, but bond wall gives us some opportunities for maybe trading. And of course, those who bought bonds for now are making money. So if you did that, nice job, but manage your risk, because overall outlook, macro-based and signal-based, is not clear for bonds. So I'm not very bullish on those. But if you know from what I was talking during Spaces and other videos, I don't have any fixed income positions. For months, maybe for 3 months, I was talking that, yeah, I'm not shorting bonds, but I'm also not buying them. Signal to short bonds is very old news. Short signal is not there for at least 3 months already, because markets were very choppy, and TLT as well. But as we can see now, with this move, probable outcomes are quite wide, knowing that it's a fixed income position. So yeah, it can give us some opportunities to make some moves. Okay, so if we go back to my fractal range, so as I said, TLT now is basically already bullish on my fractal range, which is quite interesting. But upside downside ratio for Monday is not above 1, so it's way below 1. So it can retrace, of course. What we can see that basically from the main indices, QQQ has upside downside ratio of 0.77. Also IWM 0.67, SPY 0.5. So all of those are not above 1. So we can see basically two scenarios: either a chop or retracing move down. I would like to see move down, but of course all those indices and bonds are up on the week. So I will have to wait for a clearer signal to act. If we take a look at EWH-EWO spread that I closed more than a week ago, as we can see, it was a quite good idea to close it. So signal was right, and basically this week the spread is down for almost 4%. XLU-IWM is also down, but that macro position, my view on that macro position hasn't changed. Now it's hedged, but basically it's not looking bad. I mean, this week it went down 4%, but basically it retraced a little, and I will wait for a clearer signal to remove my hedges. And if we're talking about XLU-IWM, I still plan to unhedge and hold that position, because it's mostly macro position and basically defensive play versus cyclical play. And if we get another bear market move down, from signal perspective, this spread should be okay. Okay, so as I said, dollar has highest upside downside ratio, and gold has the lowest. So yeah, gold still looks terrible. Those people who were buying gold for last months, I can say, well, they shouldn't be happy. And from the signal perspective, I don't know why would someone do that, at least in the short term. Of course, everyone has different time frames, so I cannot, you know, say anything. Basically, there are people who are always buying gold, so it can be a strategy also. But from trading perspective and short-term perspective, for commodities and gold, which is not a commodity, of course, but commodities and gold look terrible. Okay, so let's quickly review momentum scores. I will start from momentum scores, not from correlation, because those are more interesting now. So yeah, so 5 days, 5 sectors and other stuff. The chart will pop up soon. Okay, here it is. So and again, what we have basically IWM 0.88. Bitcoin is also positive. Even gold from 5-day perspective is positive, but we will see that over the longer term it's of course not the case. SPY has 0.71, bonds 0.72, so TLT. Yeah, so basically this is what we have here. So indices and bonds are positive short-term momentum scores, so of course no green light for shorts based on short-term moves. XLU is negative. What is the strongest? Strongest is XLI and XLY, as I can see. Okay, and also, of course, it's important to mention that from a 5-day perspective, dollar is still negative and quite strongly negative. Okay, let's move to 10 days. Yeah, so silver minus 0.72, Bitcoin slightly positive, gold slightly negative, TLT is very strong, SPY 0.32, dollar is slightly negative as well. So in the short term, 5 and 10 days, dollar is still negative, of course. But from other signals and from overall view in the markets, I still expect it to return back to a bullish momentum. But of course, for me to act, I will wait to make some other conclusions or to open actual trades, because for me I don't have to do anything to be long dollar, because I already am. I hold my cash in dollars, so we can call it a long dollar position. Yeah, so dollar slightly negative, TLT very good, and IWM has a positive score 0.38, QQQ 0.32, SPY also 0.32. So all indices have positive momentum score. Bonds also. And the longer term view, which is 30 days. Yeah, it's different, because in a longer term view, dollar is still the strongest. Energy very weak, negative 1.6. Silver very weak. Gold negative 1.3. Bitcoin is negative. So DIA negative. IWM negative. QQQ slightly negative. SPY negative. So from the 30-day perspective, all those indices are still negative. As you can see, bonds are positive. So now it's of course no need to do short trades in bonds for sure. No need to do that. We need to wait for a signal, because bonds are positive in all the time frames from the momentum score, and all indices are positive in the short term, but still negative on a 30-day basis. Yeah, so I tweet those charts on a daily basis. You can take a look at. Now we will go to developed markets as always, and if you want to study those charts, you can always stop a video if I go too fast, for example. So developed markets, we will start from 5 days. Yeah, okay. So basically a lot of positive values. So in the short term, equities look good. Hong Kong is negative, so of course I was talking about that last week. So that was one of the main reasons why I closed that spread, and it's still negative as we can see. So it was a good idea. And actually, except of EWH, all of those are positive. So EWN 1.4, EWJ 1.3, WC 1.2, and a lot of others are 1.2 or close to that. Yeah, so in short term, very positive momentum in the developed markets. Now 10 days. Again, EWH is very negative, so -1. EWI is slightly negative. EWC is neutral. EWP slightly negative. All others are positive. EWN looks good from both 5 and 10 day perspective. Basically, EDEN also, and DAS. But as we can see, a lot of positive momentum, so it's now basically, yeah, it doesn't matter what your review about the market is. From the timing perspective, having those shorts would not be a good idea. Of course, we will wait for signals to change, and 5-day momentum score usually is the first one to change, so we will monitor that very closely. And 30 days. Yeah, so more red here. Yeah, so basically developed markets have the same situation like SPY sectors and all main US indices. Basically positive momentum on 5 and 10 days and very negative momentum on 30 days. So EWO, EWP, basically EWC are the weakest momentum. If we try to find positive values here, you will see that you cannot find those. Basically, WL has only negative 0.17, but it's still negative. So basically, everything is negative here. So same situation as in the US. And now we will go to the emerging markets. I expect the situation to be quite similar, but of course emerging markets are less correlated to the developed markets, so maybe we will see some differences. And yeah, we can see quite a lot of differences. So 5-day momentum score, even though majority of scores except one are positive, but some of those are very weak. So for example, EWW, EWZ, FXI China, also ICOL Colombia is negative. He has a negative score. EIDO is quite strong. EPU is quite strong, and EWM. Yeah, so those are quite strong. We'll see how correlations look, but yeah, so as I expected, as always, the situation is slightly different compared to the developed markets overall. Even though the momentum is positive, but some of those are not very strong. Now let's go to 10 days. And after that I will do commodities, and then we'll move to correlations very quickly. Yeah, so from a 10 days here we see quite a few negative values. So of course China, ICOL, EWZ, EPHE, those are very weak, and what is strong? Basically KSA, QAT, And of course, in all charts I include the SPY, which is of course not emerging markets, but it just makes it easier to compare things to the SPY. So yeah, that's the main difference. And the last one is 30 days. Okay, cool. So ICOL is terrible, so it's negative and strongly negative in all the time frames. KSA is also quite negative. Actually, all the things, yeah, all the things except the INDA are negative and quite strongly negative. So over the longer term, the situation is absolutely the same. Basically, on a 30-day basis, all equities have a negative scores except a few candidates from the emerging markets. Yeah, so no changes here, but we can see that on a 5-day and 10-day basis, basically emerging markets live their own life, so they are not very correlated to the developed markets. Yeah, cool. So now we'll do commodities quickly, and then we'll go to the correlation. Yeah, so 5-day momentum score for all the major commodity ETFs. Yeah, so okay. Oh, sorry, it's emerging markets. My bad. I will not edit those videos, so please forgive me. It will take a couple of seconds. Yeah, now it should be okay. Okay, so CANE very negative, corn very negative. From a 5-day perspective, also wheat has a negative momentum score. Palladium is quite strong. UNG is quite strong. Wood is strong. COW, copper. So yeah, mixed view. Some commodities are still very negative, even on a 5-day score, but some had a run up. So of course, USO is neutral, slightly positive at 0.14. So yeah, so now not all commodities look terrible. So the situation is changing slightly. Yeah, but things like CANE, corn, and wheat, I was talking about those for months. Yeah, those still look terrible. Okay, 10-day. And 10-day is I expect it to be mixed as well. Yeah, it kinda is, but more negative. So yeah, so of course CNE, corn, terrible, DBA, terrible, coffee, Joe, terrible, UNG, yeah, so no surprise, UNG has the strongest positive momentum score, and not a lot of positive scores here. So Wood has slightly positive score, and USO, which is of course always important to measure, is negative 0.48, and the URA is 0, so neutral, absolutely neutral on a 10-day basis. Yeah, but a lot of red here, a lot of negative values. And the last one from the momentum score perspective is commodities for today. Okay, so what we have here, COW here is positive quite strongly compared to other candidates, so 0.54. Of course, corn, CANE, BAL, terrible, silver, of course, terrible, soybeans, terrible. So from 30-day perspective, not a lot of have changed, only palladium. Palladium looks quite good in short term and 30-day basis. So yeah, I have it already in my watch list, so I will monitor that for clearer signals and maybe for some trades. But as I said, especially in those regimes, I'm more a risk manager here. So basically, for me, it's normal to sit almost fully in cash and have some couple of spreads or a couple of other positions open. So in this regime I would never go to like less than, I don't know, 70% cash, something like that. So now I'm like at 96, but even if I open some shorts in the future from both commodity or equity space or some spreads, I will still have at least 70% cash, just to be able to act when needed. Okay, so this was the momentum score, and now correlations. So I will skip quite a few of those, just to save time. If I see that no changes compared to the previous week, so we will see. 5 days by sector number stuff, rolling 5 days correlation is quite high on some sectors, and quite low on others, but majority of those are high, so not extreme. In some cases, yeah, because extreme correlation would be if all sectors had a high correlation. So now we see that not all, and especially things like XLU on rolling 5-day basis, almost not correlated to the market at all. For swing trading, for holding positions at least 5 days, this can be an interesting fact to know, that XLU now is has almost no correlation. Yeah, so now daily, which is more important always, so you can see that it's not extreme, and actually it went down a little. On Monday I thought, okay, correlations are going higher, so quite a lot of things were at the top end of the range, so I thought, okay, I will maybe try to short, and I know a lot of other people also spent first part of the week just adding to shorts, but it was not a good idea, because I ignored momentum. So basically correlations were going up, and the ranges showed that there is not a lot of upside, but momentum score was telling the different story. So the lesson here for me is basically to never ignore some signals, and to only act when all signals say the same. Yeah, so not extreme. Yeah, so 10-day basis, SPY TLT is negative. Overall, SPY sector correlations are totally not extreme, as you can see. Basically, average is like 0.7 something, which is not extreme at all. So I will not call it the signal to act. No, not at all. We want to see a lot more purple here for us to be able to act. And we had some signs on Monday, but those signs were also not extreme. Just the rate of change, because sometimes I'm not only looking at the actual value, but how they are changing. So on a daily basis, and you can do that as well from those matrices I tweet every day. So whether the correlations are going up compared to yesterday, or down, or stay almost the same. So correlations went up quite significantly in the beginning of the week, but then it came down. So no signals here. And the 30-day basis, let's see a stock bond correlation here. And what we have, okay, I will skip rolling 5 days because yeah, those are high, but also not extreme. SPY TLT, yeah, no correlation at all, 0.022. So yeah, it's positive, but what is important is the rate of change. For now, no correlation at all. Sorry. So basically, what I want to do here is to wait for those to go up on 5 and 10-day basis, and not only to become positive, but of course to go up compared to previous days. Yeah, so those were 30-day correlations, not 10-day correlations. I think you noticed that. Uh, okay, so yeah, everything I said was about 30-day correlations. And SPY TLT is negative on a 10-day basis. So, okay, almost no correlation on 30-day and negative on 5 and 10-day basis. So definitely not a signal to act. And as we can see, those SPY sector correlations are also not very high. XLI, XLK has quite a big correlation to the SPY, but basically that's it. And 93, 94 is definitely not extreme, especially on a 5 and 10-day basis. On a 30-day basis, those numbers would be extreme because, of course, it's hard to have such high correlation over the longer term. But at 5 and 10 days, no, not extreme at all, and stock bonds are still negative. So, and I will do developed markets because this one is important. Emerging markets will not be important for sure because the correlations will definitely to SPY will be negative or low. Okay, so developed markets and 10 days. So this is the 10-day basis. So we will only take a look at the last line, which is correlations to SPY. So Norway, EWH are still candidates to have on my watch list because this correlation is quite low. Not negative, of course, but quite low. What has the highest correlation here? So EIRL, EWN. If you remember, EWN looked quite interesting from momentum score perspective, but from correlation to SPY perspective, it's not that promising anymore. Let's move to 5 days. Sorry that I started from 10 days. Here. Okay, the last line, so again, Norway, EWH is still interesting. That's why I have EWH in my watch list, also EWO, but I have it as a spread in my watch list, not a trade anymore. But at least now you know how I select candidates to create ideas for some interesting spreads and maybe for some interesting trades based on the regime. So here I'm not looking for the very high correlations. I'm looking for specific assets that are low correlated, has a low correlation to the market. And 30 days. Yeah, so EWH 0.55, very nice. On a 30-day basis, it's quite a low number, really nice. So yeah, and as you can see, this process is quite boring, but for me it's very important because why boring? Because not a lot of changes happens on a daily basis, and actually when the changes happen, then usually I need to act quickly because that signal, cannot last for forever. But as you can see, not a lot of changes. We were talking about the same tickers last week and the week before and so on. So yeah, EWH. Let's just do 5-day emerging market correlation to see if it's worth talking about or not. Yeah, one moment. Okay, so what we have here, emerging markets, 5 days. Okay, let's run. Sorry for mistakes. Yeah, okay. Now it should be okay. Yeah, Okay, so if we're talking about correlation to SPY, as you can see, AGT is almost one correlation to SPY, which is 0.97. Interesting. Quite a few of those have very high correlation to SPY. So as we can see now, emerging market moves are basically following the US market moves. But we can see some rebels, so EWM, EWW, yeah, basically those two. Maybe EZA is worth mentioning also, but as I said, I'm not trading emerging markets in this regime just because of crazy volatility, and usually, even though if we see a lower correlation in the short term, when the collapse in markets happens, usually it only takes a few days for those to follow. And I want to diversify my portfolios and to get a negative beta in this regime, because of course in this regime positive beta is a no-go. So for negative beta, of course, you can do basically just shorting, so buying some assets, shorting some assets, but sometimes you can reduce your beta significantly just by trading assets that have a low correlation to the overall market, and by building portfolios based on other signals from those assets, not from highly correlated assets. Because yeah, of course, if you decide to trade highly correlated assets, then the only possibility here is to be on the short side, not on the... And on a daily return correlations, we see that it's also what we have. EWM, EWW has a negative correlation, very nice. Also EPOL, Poland, EPU, yeah, so on a daily basis, those correlations are not high. So that's basically what I was talking about, that if you are holding assets for longer term, 5 days or more, so you are doing swing trades, usually those correlations are always higher, and you can spot that from all assets that we were looking at today. So of course, SPY sectors, developed markets, emerging markets, basically the situation is the same. I mean, if you just buy and hold, returns will be based on regime and nothing else. Okay, so let's just do 10 and 30 days. I see that situation is quite interesting, so let's not skip anything and let's finish. So on a rolling 5-day basis, 10-day correlation, as you can see, is high. So that's what I was talking about. So basically, there's no risk management opportunities here from correlation perspective. But if you are monitoring and adjusting your portfolios daily, by looking at a daily correlation, you can find something interesting. So again, EWM. So EWM is interesting both from 5-day and 10-day perspective. FXI, China, EPU. Yeah, so you can stop the video and examine this, study this chart, but basically quite a lot of candidates here that have a low correlation. And on a 5-day basis, we even had some with negative correlation. And 30 days to finish the video. Actually, I will talk a bit about Hurst Exponent before we finish. But yeah, so on a 30-day basis, yeah, so correlations are not that high. Again, AGT has a very high correlation over the long term, AWW. But in emerging markets, we see that even though if we are holding assets for very, very long time, so for months or more, and we adjust it on 5-day basis, not on a daily basis, basically there are some assets with quite low correlation. So China, ICOL, QAT, EPU, and so on. But as always, I'm mostly looking at daily correlations first, only then I use rolling 5 days. So here, yeah, on a 30-day basis, quite interesting. QAT, ICOL, EPHE, EPU again. Yeah, so EWM, EPU, I will add those to my watch list now, and we'll see what I can do with them based on momentum scores and numbers and other things. Actually, I had a question from a user to explain how I monitor and how I interpret rising and falling Hurst exponents. So I will spend a few minutes now talking about that. So of course, when I was talking about the Hurst exponent in the first video and in the video which was related to only Hurst exponent, I said that it measures the persistence and you can treat it as a probability of the asset going to the same direction tomorrow when it basically if today it went up, there is a probability of X that it will go to the same direction tomorrow. That's how I think about the Hurst exponent, and actually it makes sense because the overall definition in academia and everywhere else is basically their persistence. So if asset has a Hurst exponent of 0.5, it's random, but actually my definition is easier to understand, because if it's random, it has 50% chance going down, 50% chance going up tomorrow. So you cannot predict that. And Hurst exponent below 5 is mean reverting, and actually it also makes sense. So let's say asset has 0.45 Hurst exponent, so basically there's only a 45% chance that tomorrow it will go to the same direction, so it's mean reverting. And for trending it's the same. So yeah, of course, if it's above 0.5 it's trending, so the probability of it going to the same direction is a lot higher than 50%. But for short-term values, I don't use those. I basically, my definition is that if 1 year Hurst is above 0.6, it's quite high. If 3 month Hurst is above 0.7, it's quite high. So I want to see a lot higher numbers, especially in the short term. So now, how do I look at Hurst exponent when it's changing rapidly? So if Hurst exponent is rising, so consistently, so it's going up and up and up and up, it just gives me more conviction to hold those assets for longer periods of time, because there are different strategies for trading. Of course, you can do a trend following, you can trade the range, so basically just buy near the low end and sell near the high end, or short near the high end and cover near the low end. So for lower Hurst assets it makes sense. For higher Hurst assets I tend to hold positions way more. Yeah, but it's just how I use the Hurst. Basically, when I see Hurst exponent going up, it just gives me more conviction about the direction I'm trading. And of course, I never trade based on Hurst. So the direction is determined by the ranges, the trends, and the momentum. And actually, those are important. So if I hold a position, so it can be spread options or just outright position in some ETF or stock or whatever, if all our signals are not changing and Hurst is going up, it just gives me, I just widen my targets basically. So you can widen your targets because there is a higher probability that this move will continue. And if a Hurst exponent is going down, you start to risk manage it in a different way. So of course, using stop losses based on ranges or based on volatility or others, and maybe reducing your overall targets or decreasing the position, so reducing the position. Because Hurst is, in my process, of course, Hurst is used in a lot of places. One of those is calculation of a range itself and trend. But when I'm looking at the Hurst number alone, it's always about the conviction. So hope I answered this question, and hope it helps. But basically, if you have a clear signal for some directional move on some asset based on our signals, you actually want to see Hurst Exponent to go up, because basically it just gives you more conviction to hold that position for longer. And for my risk management process for when to cover, I also think whether I should use a short-term range on my fractal range or longer-term range on my fractal range. So basically, if Hurst is going up, so maybe my target will be the high end for bullish position of longer term range and low end for bearish position of longer term range. So basically, that's how I decide my overall targets for the position. And of course, it changes daily. So if I see that for a few days Hurst Exponent is going down, maybe I will go back to the short term range for that. Okay, so hope it helps. As always, feel free to tell me if those videos are useful, and also tell me what topics you want me to cover in upcoming videos, and maybe what should I focus on, and it will help me a lot to make those videos better and more valuable. And as always, thanks for watching, and have a great week. Bye.